is ageless. All right, so we'll be continuing with our candlesticks lecture. So remember, we've treated pin bar, we've treated bullish engulfing, we've treated tweezer top, and we've also treated dark cloud cover or whatever it is. So, and I made mention of it that you don't need to know so many of these candlesticks patterns. Okay, what we just need to focus on and pay attention to is especially the what is it called, the pin bars. You understand? So please kindly take note of it that those dojis are pin bars. So you don't need to focus on the name. Just take them as pin bars. Okay, so the three major ones that you should be focusing on especially is the pin bars, then the engulfing candles, then tweezers. Okay, these are the three major candlestick that you should be using to trade. Okay, don't we have so many of them, so many candlesticks, but focusing on all of them you will get confused, you understand, but the ones that most price in the market are those three ones that I just listed. Okay, so now how do we now trade with with a pin bar and an engulfing candle? So let's start with the pin bar. Look at this, is the pin, these are the pin bars, you understand. So look at this one. This is a bullish pin bar, this is bearish pin bar. So we say bullish simply means that when it happens at the down part of a trend, you understand. So it shows that there is going to be what, price is going to be bullish. They say a pin bar is a chart candlestick. It is characterized by a very long tail that shows rejection. That word rejection, and it indicates that the market will move in the opposite direction. So by the time we see it in the chart, now you will see how it's being used to trade. Don't just use it to trade on its own. You must also use it along with other indicators. When I mean indicators, it simply means your trend lines and maybe probably your support and resistance. Okay, look at the pin bar. So this shows that there's going to be bullish, there is bullish intention. Can you see? The moment this pin bar appears here, look at the price as look at the way it moves up. Okay, now look at this. So now probably this price was ranging before. Can you see? It was ranging here. Now the moment it now broke this resistance line, the moment it broke this resistance line, now it now came back again to form a pin bar. No, when anytime price breaks a resistance line, it usually, most often, is usually what, retrace back. Okay, the moment it retrace back and you saw the formation of this tiny pin bar, so that's where you should jump in and what, and click a buy. All right, can you see that? That's how to trade pin bars. Now let's go to other ones. Now look at this. So this price was on a bearish mode, you understand. The moment it got to this support zone, it broke out. Then there was now a what, a pullback. A pullback simply means retracement. So it retraced back to the line and form what, pin bar. Can you see it? It form what, bearish pin bar. So the moment this bearish pin bar is formed, then you jump into the market, then you ride it down. Can you see that? So that is pin bar. Now the other one is, okay, trading the pin bar candlestick with the trend. Now how do you now trade it with the trend? It's the same way. Now look at this. So this price was coming, so there was a pullback to the what, to the what is it called, the support line, and formed a pin bar. Can you see the pin bar there? Look at it properly. Look at the pin bar that was formed on that line. That shows that there is going to be what, a bearish movement. Can you see how how far the price moved. So pin bar candlestick is very important. So pin bar trading tactics. Now this is another one. Please endeavor to read all of this, okay, because they are very important. There are some key information, key points that you will definitely get from it. Now look at this. This price was ranging, so it broke out with a pin bar, right? Can you see that it broke out with a pin bar? So, and look at how far the price moved. So that is pin bar. Now let's go. Please endeavor to read all these parts, very important. So this is just the one that we talked about now. So look at it now. Look at it again. So this price was trending down on a bearish mode. The moment it broke the support line, you understand, there was a retracement. You understand, when it broke out here, maybe probably you couldn't enter. There is still another opportunity for you to enter on the formation of this pin bar. So can you see it? The moment you enter here, can you see they even told you to place your stop loss above the pin bar, then you ride it down. You ride the market down. So can't you see that forex trading is very easy? So you don't need to be losing money in the market. If you know what you are doing, you understand, you study hard. So don't just jump into the market. All right, just make sure that you follow some basic principles. Just keep it so simple. You understand? Learn how to draw your trend lines, your support and resistance. Then know how to how to use pin bars, know how to use engulfing candles, know where to place your stop loss, especially your stop loss. Know where to place it. Don't just place stop loss anyhow, anywhere. If not, price will just come back, retrace, and take you out of the market. You just be losing money, a whole lot of money. You understand? It's very easy to trade on demo. By the time you fund your real account, that is when you will now see that your emotion will be tested. You get it? So your emotion will be tested. You understand? Just keep it simple. This thing is very easy, and don't rely on signals from people. Learn how to trade by yourself. Okay, study. By the time you study, when it will get to that point, that point, I call it aha moment. You understand? It's a breakthrough moment whereby you can analyze the market, analyze the chart. You will know the direction of what of the market anytime, any day. That's when you start making a lot of money. Start making money, thousands of dollars. Now look at this. Now this price was ranging. Let me just say it was ranging. Now it broke out. Don't forget, I said earlier on in one of the videos that whenever there is a breakout, you understand, from a ranging market, if a ranging market breaks out, it usually moves so fast and far. You understand? So the moment it breaks out, now it retraces. It price usually does it. When it breaks out, it will definitely retrace back, then before it continues in that direction. You understand? Now the moment it breaks out, can you see it now later form a pin bar on this um resistance level. You understand? So it formed a pin bar on this resistance level. On that pin bar, you just enter instantly, then you ride the market. So can you see? So easy. You understand? Okay, that is that about that on the pin bar for now. So I want you to study properly. All right, thank you.